Welcome to MGAA Conversations, our new podcast channel where we'll be discussing with an exciting number of guests all things related and topical within the ever-growing MGA community. Absolutely delighted to welcome Graeme Trudgill, the CEO of the British Insurance Brokers Association, to this exciting podcast. Good afternoon, Graeme.
Hey Mike, how are you doing?
Not so bad, actually. Obviously, slightly drier than you are, given what you've just told me about your walk back to the office.
Yeah, just walked back from our Regional Chairs Advisory Board meeting through a huge rainstorm with no umbrella. So I probably look like a bit of a drowned rat at the moment, but my hair's not as good as yours, Mike.
Oh, great. So anyway, moving swiftly on and welcome to MGAA Conversations. So Graeme, you've been in the role now, I believe, sort of 6 months. We've seen through social media that you've been all over the country, etc., meeting your members. So, what would be great sort of for me and our audience really is to just get some 6-month reflections from you in terms of, the BIBA, the members, the challenges, opportunities.
Fantastic. Yeah, well, it has been an incredible 6 months. I mean, in our tour of the regions going around the country, I got to meet with over 700 brokers. So a little bit like the whole Macron town hall thing that he did when he took over. Not that I necessarily think like Macron, but it was our largest ever tour, our best attended ever tour. And it really gives me the opportunity to properly understand from first hand what the key issues are for our members and then what is it that I need to think about doing to support them. And where do we target that investment? So our theme for the year ahead is one about investing in members. How can we best support them? And there's 3 key areas that I've identified from the tour. One is representing them. So representing them to the government about the key issues on the go. We've just had the Financial Services and Markets Act come through in the last few months. And now we've got to bring home some of the metrics around that. So that representation to government and the new insurance minister is really, really important. Then representation to the regulator. We've been through an incredibly tough spell with new regulation. I mean, I'm sure your members have been through the fair value assessment work there. So that's been a huge amount of work. And then I think representation in the media. There's been quite a lot of challenges for the industry with COVID on the BI side, then with the cladded buildings. So it's important that we can represent members as the sort of the champions of the customer, the agent of the client. So the representation is the first third of those 3 pillars. The second side is the operational side. So how can we help members with guidance, with schemes, with checking on insurer security for unrated insurers or rated insurers? And then fair value assessment is, I think, a huge piece of work that we've had this year, where members have to sort of evidence why the commission that they earn is the right amount. And so the first day I was appointed on the 4th of July, I said to the main board, we need to support members more in demonstrating to the regulator that they are delivering fair value. And you would have seen the portfolio letters that came out and the FCA reports on brokers' earnings. And it's really important that members who are delivering fair value actually have a way they can show it to the regulator. So we've worked really hard on this, and the framework was launched very recently. And I think that's something that members can use as a methodology to demonstrate how they are giving great value to the regulator, to their client, to insurance companies, anyone that they need to speak to. And then the third, I suppose, area of investment is about the future. Because there's a lot going on. We've got AI and technology and machine learning all heading our way. It's all over the trade press, all over all industries now. And we need to make sure that we bring our members on that journey, that we can find that sweet spot where they're working really well with that, taking advantage of it and not falling behind in any way. But also in the future, I think we're looking at new perils, talk about walking back in the rain. Surface water flooding is a real issue in London, for example, much more than it ever used to be. So new perils there. And also the young brokers, bringing them through that sort of talent gap that we've had, as many industries have right now, bringing new young people into the sector. So we're going to have in our manifesto for 2024 several work streams there to support the young brokers. So there's some reflections on, I suppose, those 3 key areas of investment. Some of the challenges that we've seen have been really, really significant. So the letter we got from Michael Gove last year was the most serious letter I've ever seen. Being a broker or being at BIBA for as long as I have, threatening to ban commission. And so, this is something that we had to focus on. So I've mentioned the fair value assessment framework that we created, and we used Auxera to do that. But we've also worked with our leading real estate brokers to demonstrate that what they're taking, or being given, should I say, for their earnings does represent fair value. And if the building insurance premium goes up significantly, that they can calibrate their earnings to the right amount so they can still show fair value, and they can't be accused of making money at a time when the premiums are increasing. And then the third thing on this Michael Gove issue is about planning a new scheme, which we're working on very closely with the ABI, that can hopefully assist those buildings with the very highest premiums, where leaseholders are paying much increased premiums over what they were a few years ago, and particularly pre-Grenfell. So this has been a really serious challenge for us as a sector. And I think these three things, with the framework, pledge, and the forthcoming scheme, has helped, because I was able to go and meet Michael Gove, meet the FCA, and basically say that we're doing what you want. The leaseholders are right at the heart of what we're trying to do here. We want to help the policy stakeholders, as they're called, as well as the policyholders, to get competitive premiums for difficult to place risks. These buildings aren't easy to place. But we've managed to do that, and I think the threats of commission banning or capping have gone away now, and it's now down to us as an industry to represent fair value as we go forwards.
Well, clearly, understatement, you've been extremely busy. If I could just pick up on your last point, because again, it's something which my own members would be really interested in. When you sort of met Michael Gove and the regulator on that particular issue, did you get a sense they really understood at a forensic level the challenges and the fact that, your members, and to another degree our members who represent insurers, are doing their actual best? Or do you feel that it was a little bit sort of light touch and it was just a headline as such? What was your sense, Graeme?
I think when it comes to the government, I think it was politicised very heavily, and they didn't appreciate the incredible work that brokers were doing to even get these buildings placed in the first instance, when many capacity providers had pulled out of the sector, or only prepared to perhaps cover the first 10 million rather than the whole 100 million of the value of the building. And the brokers then had to try and find capacity providers to make it up to that 100. And it's been months of work, very difficult for them. BIBA got involved ourselves in 50 of these individual cases, which MPs or stakeholders have brought to us, to basically say we need some help. Our building is going off risk because our capacity is going. So I don't think we got much in the way of appreciation for the work done. Instead, the focus has been on the premiums charged, and the premiums have gone up because the risks are very different now. In that pre-Grenfell, an insurer could potentially anticipate a fire taking out one or two floors of a building, but now quite clearly the risk for these buildings that haven't had the remediation work is that the whole building could be lost. So the insurers are on for a much greater exposure than they ever were. That's reflected in the risk-based pricing, and that's when the government have got involved, and obviously Gove wrote to the regulator wanting the investigation and potential remedies brought forward by the regulator. So we've had the policy statement. We know what we need to do now. We do go to great lengths. We meet with the FCA. We just met with the FCA chairman. The FCA came in to meet our main board, and they'll be meeting our advisory boards as well. So this is one of the things that I really want, is for the FCA to have a better understanding of general insurance brokers and intermediaries, which includes MGAs as well, of course, because we do a really important role in matching clients' needs with the insurance to transfer that risk. We're not just a post box. We are the professionals. We do work transfer. We do so much work, bring so much expertise. We have a PI exposure because of the work that we do. And so I think we're in a sort of an education process. We meet with the relevant government departments, so Department for Levelling Up Housing Communities from Michael Gove's perspective, but also very importantly the Treasury Insurance team. And I think We've worked with Treasury for a long time. They understand our sector. I think less so with DLUC. There's a learning curve for them there. So it's been incredibly hard work, but I think we're in a much better place now to go forward. And if we can demonstrate fair value, get cover for these clients, then and the members are working really well with this pledge that's been made, then I think we're in a better place.
Excellent, excellent. Well, congratulations on that. So, having done the roadshow, having met 700 plus sort of brokers, how would you categorise the mood of your members and the broker community? I just before we hear challenges around insurer service, we hear regulation, but brokers bounce back ability is unrivaled, I would say. What would be your sort of sentiments in terms of the mood of your members and the broker community overall?
Really good question. I would say that they're really focused on the work that they have to do. They're working harder than ever. Capacity is tight, regulation is demanding, which is why we look at MGA capacity to fill those gaps. So very focused, very hardworking, but also I would say reasonably upbeat, despite I think that the regulatory pressures that they are reporting strong sets of results. I think the sector is in good health. If you look at the GWP written by insurance brokers, sort of this time a year ago, it was 85 billion pounds. And do you want to hazard a guess as what the number is now, Mike?
120?
Not quite, but it's 105.
Oh,
So
wow.
what our government's wanting growth to get, an extra 20 billion pounds, 20% almost, GWP. Now that includes everything. That's marine, aviation, transport, reinsurance, but it's all the stuff that goes through brokers. That's fantastic in a very difficult and challenging market. So focused, but upbeat at the same time. Brokers will continue to innovate, will continue to bring new products forward and find new ways of supporting our customers.
And on that same theme, Graeme, are you encouraged or not say nervous, but in terms of new broker entrants into the UK? Do you see, is the bar too high in terms of, bringing new sort of blood into the broker community? We all see consolidation. That's part of parcel of the landscape. But I just wondered what your sense is around new broker startups.
I think what we've seen with consolidation has created a lot of really fit, healthy, strong brokers. But of course, some of those MD CEOs that sell up, they do their period in the wilderness and they want to come back and start up again. So we often see a bit like, Time Lords regenerating. The brokers are back on the scene and starting up new brokerages. We also have the sort of the insurtech startups as well, which is quite interesting. And there's a lot of interest in UK brokers. If you look at the Americans, I think Americans own just over half of UK brokers as it is.
Yeah.
But we see more and more interest coming over to the UK. So really healthy market. Yes, there'll be startups. I don't think it's easy starting up a broker from scratch now. It's expensive. It's going to cost you a lot of money, which is why we're seeing the AR route becoming more and more popular. And there's some great models out there of organizations, BIBA members who have sort of special AR networks, so to speak, where they're able to support them, give them those regulatory permissions and access to some agencies. And then that's the foot in the door to then sort of move up the chain and become a broker once again, and then ultimately potentially an MGA if they can get their own sort of capacity too.
That's encouraging. That's encouraging to hear. Actually, it's great. So we've touched on it in terms of our conversation so far. So you and I sort of have good relationship with Matt at the FCA. We have our sort of conversations and challenges on that. What would you like to see in terms of in 2024 from sort of Matt and his team? If you had a sort of 1, 2, or 3 podium to fill in terms of what you'd like them to do by the end of 2024, how would you categorize that? What would be gold, silver, bronze?
No, you're right. I mean, we have a really honest and open and frank relationship with the regulator. We meet them frequently, and we have some words in our manifesto that we really want them to progress on. I think overarching, we want proportionality. And I think this is what the Financial Services and Markets Act can do really well with. It can bring forward with it more proportionate regulation so that this new requirement, this new objective on growth and competitiveness, it's about how we bring that home. So just very recently, Treasury have published their paper on the metrics and the call for proposals and their response. Their response probably could go a bit further, but we are going to have further conversations with Treasury throughout. Well, in fact, we've got one tomorrow, but we'll be taking it forward throughout 2024 just to make sure that the cost benefit analysis is done properly and that the sort of regulation we get out is aligned with the view of government. And whether that government is the Conservative Party or the Labour Party or a collaboration coalition between Labour and Lib Dem, whoever it is, they all want growth. Labour particularly want sort of secure economics or securenomics, as Rachel Reeves calls it. And so it's getting that balance. And when we met with the FCA chair, they talked about reducing regulation but still having high levels of protection. I think that's what we want. So proportionality is number one on the list for our members, because I don't think we've had that. And the example is the second thing on my list then, and that is about product value assessments that demonstrates fair value. I mean, some of our members, I'm sure your members, have to do thousands of these.
Yeah,
if you think a broker maybe has, 30 agencies, they deal with, say, 10 products from each agency, that's at least 300 product value assessments that they have to do, and lots of brokers deal with a lot more. So our view has always been the larger clients don't need that. They get suitability tests done, they get demands and needs, they probably have financial controllers that you're negotiating with. Do we really have to do all of this technical paperwork for those larger clients? So I think something that will be a work stream for us in the year ahead is to try and look at the consumer duty in the GI sector and look at that cutoff where you have sort of eligible complainants with the ombudsman, and really to consider, could those that are eligible complainants, they could still have the product value assessment requirement, but those above it don't really need it, do they?
Yeah.
So can we cut some of the red tape? Do the London market really need to be doing all of these things? No, they don't. So I would hope that the regulator could listen to the market there. Certainly we were keen to work with yourselves, with the LMA and others to bring forward a more proportionate system of the product value assessments. And I would say the third thing, this might sound like a minor thing, but it's something that members talked about all the time, and that's the reporting to the regulator. And to give you some sort of example, with the RMAR, obviously you have to report back twice a year. And when you do that, you have your accountants help you, you have compliance consultants help you, the senior team of the brokerage, the compliance team, they're all tied up for a considerable amount of time doing that. So you do that and you think, right, I've done my reporting every 6 months, but then you get a request for a resilience survey, or then you get a request for an economic crime report. And then they're now talking about the D&I reporting that will have to be done in the future. And it's a question of every time you do that, it's more accountants, it's the top team taken out, it's compliance consultants, it's cost, and you're not able to focus on your clients, on the innovation. So I think we could have better reporting, smarter reporting. So how can the regulator work with us? And maybe you just still have those two RMARs, but they just have those relevant questions included within them. So three things: proportionality, let's look at product value assessments and fair value, and then the reporting side. I would say they're on our wish list. And you know what? I think they should all be achievable, and it's something that we'll certainly do our very best to push on.
Yeah, if I just circle back on the fair value, because obviously you and I were both at a recent event where Matt was sort of interviewed, and my takeaway was the fact that, and I think Matt conceded that, the guidance around fair value, the taking into account the economic landscape, the market cycles, especially for commission-based brokers, if the market is a hard market, commission will go up naturally, and if it's a soft market, commission would go down. I think I got some encouragement that he took that away in terms of that, the fair value in terms of how it is now is a little bit of a blunt tool. Would you share that sentiments?
I think one of the challenges that we all have is that when the FCA come out with new requirements, they don't tend to have a lot of commentary or guidance or Q&As and things like that. And it's up to trade bodies like ourselves and members compliance teams, consultants to try and help translate that and to see, look, actually, if we do it this way, is that okay? Is it not okay? So that's why we sort of work with Oxera and we socialize some ideas with our members. And we did, in fact, probably more consulting with our members than we've ever had before, to make sure that what we were proposing is something that would be flexible. It would work for small brokers, large brokers, cladded buildings, or travel insurance, whatever you were, whoever you were. If you use this formula, you could demonstrate fair value. And that's really, you look at your commission that you earn, and I suppose you would sort of split it into three. You would look at your direct costs. So what's the cost of your A team dealing with a cladded building client?
Yeah.
And then secondly, you would look at what are your common costs. So that would be your overhead, so your rent, your PI insurance, stuff like that. And then thirdly, you would look at what's a reasonable profit for us to make as an organisation. And then you have some guardrails around that, so that if the premium of whatever class it might be suddenly shoots up, brokers can't be accused of sort of benefiting from that, because they have this way of checking their earnings and making sure that it meets all their needs. They get a fair profit, and ultimately they can prove to the regulator that it's fair value. So there's a lot of work to do, but I think you're right. I think Matt sort of recognises a little bit more now. Now they've done the work, the effort that the industry is making.
That's excellent. Okay, so 2024 BIBA conference, Manchester, absolutely fantastic event. I know that you keep things very much sort of under wraps in terms of who the stars will be, but what are you looking forward to the most in terms of May 2024?
Well, our conference is always so exciting. We had, over 9,000 people at the last one, which was broke all records. So the theme has just been announced today, and interestingly, the theme is what's next.
Okay.
Because we've been through so much, haven't we? Whether it's COVID or Brexit or regulation changes, goodness knows how many governments. I can't remember the name of that lady, but there was that woman in one of the constituencies, and every time they said there's going to be another general election, she's like, not again. So we've been through so much as an industry, and so as everybody has, across the economy. And so what's next helps us look at what's next for brokers, what's next for insurers, what's next for MGAs, what's next for the economy, what's next for regulation. So it's a great chance for us to get key people together in the conference sessions and the seminar sessions and the fringe sessions. But then also, the exhibition market is absolutely buzzing. There's over 220 exhibitors, and there's lots of, it's not just a networking, it's a trading that's done at conference as well now. New schemes being set up. There's so much activity. So obviously really looking forward to it, to seeing so many members, to making that big speech. I can't say I'm
I was going to say,
yeah,
your inaugural speech, actually.
An inaugural speech, so the State of the Nation address. So I better start thinking about that at some point too. But no, really, really delighted that we're back in Manchester. It's such a good place to hold it, and look forward to seeing you there. I think the exhibition space is almost already nearly sold out, so far in advance. So it just shows how the industry has bounced back to COVID, and how everyone comes together at sort of that one point in the year to really support each other and forge ahead.
Absolutely, and it's a fantastic event, and I know that we ourselves at the MGAA and all our members will be looking forward to it enormously as always. So just pivot into that. So 90% of our members actually deal with brokers, and both pre and certainly during and post COVID, their share of broker wallet has gone up quite significantly, and it was recognised at our conference this year, where at one of our panel sort of sessions, particular placing brokers said that pre-COVID they placed something like 8% of their business with MGAs, and as of today they were placing something like 15% from that perspective. So a couple of things really, Graeme, sort of through your lens, why do you think that is, and just as importantly, what is it we together can do more for my members and your members?
You're right. I mean, it's great growth, isn't it, for the sector? I think what our members really want are a number of things. They want good capacity, and that's been hard to come by. And we want long-term capacity. So if MGAs can get those long-term deals, members absolutely love that. What we've seen is many of the traditional composite insurers changing their approach, pulling out of certain sectors. Certainly, there's been some migration away from personal lines, for example. So when capacity is withdrawn, brokers look for new opportunities and new names and new partners, and MGAs have absolutely stepped up to the mark. So well done to you guys for doing that. Also, brokers want great service. And I think with COVID and people working from home so much, there were some challenges there with accessing people accessing decision makers as well, which has been difficult. And so one of the things we've been working on with Grace Church Consulting is to look at the service provided um, by insurers and then feedback constructive points from brokers and how can we make that better. And so, for example, in early 2024, we'll be doing some work on e-trade, a bit of a survey to find out from members, where are the blockers, because the vast majority of our brokers love e-trade. Three-quarters of them use it all the time. But 60% of them say we often have things that aren't in scope. So it might be that tradesman that needs a £10 million public liability cover to work for a local authority, but the package policy only has 2 million. So then you've got you can't use the online e-trade. You have to phone up. You can't get hold of the right person, and that customer's gone in the meantime. So I think the service is really important. I think e-trade is a good way of resolving a lot of these issues. Obviously, brokers still want access to the actual underwriter or the decision maker, but yeah, what MGAs have managed to wrap up together is a good service proposition, good capacity, the ability to cover some non-standard risks, and you've filled a gap where other insurers have pulled out.
Yeah. Do you see, because I know you've done a lot of work very collaboratively with insurers in the UK around sharing service challenges and whatever. Do you see the momentum of improvement for insurers in terms of their service, or do you think it's still slightly stuck in the middle lane and they've still got very big tankers to try and turn around?
I think some tankers are bigger than others, so we've seen quite an array of different service standards from different insurers. What I would say is, I obviously get to speak to these insurers a lot of the time, and they're actually quite competitive. They want to do better. They recognise, that they're trying to recruit. They know what the challenges are, and so it's how can they improve? And they have been. If you look at when we first looked at the net promoter scores, it was at -20, and then
Yeah.
it went to -16, and now it's -4, and it's really heading in the right direction. And if some of this practical, constructive work, like looking at e-trade and what we do with Grace Church and Polaris. So obviously the leading insurers sit on the Polaris board.
Yeah.
If you work close with Polaris and say, look, if you just slightly redesigned it here, then it would be such a smoother journey for everybody. So could we do that? So it's about just having those practical suggestions to bring forward better solutions for the market. And then hopefully those net promoter scores will continue to improve. But I also think just genuinely, as people are moving a little bit more back into the office, that we will see improved service levels going forward.
Okay, that's encouraging. There's a place for insurers and MGAs and shoulder to shoulder without a doubt. So that can only be good for the end customer at the end of the day, ultimately, because that's what we're all here to do. Okay, well, look, I'm we're nearly out of time. So my final sort of question to you, actually, and again, let me thank you for your insight and your answers, which have been absolutely great talking to you. So if we were to do this again on the 12th of December, 2024, and why wouldn't we? What would you be hoping you'd be able to talk to me about throughout 2024?
So our manifesto launches on the 10th of January, and that has a whole agenda for the year. It's packed full of issues. If I was to think about what the members have told us from our advisory boards, our committees, our regional tours, I think we want a period of stability. If we had stability, that will bring growth. We've had so much new regulation. We've got the King's Speech with legislative changes relevant to our sector. And But that stability is what we all are looking for at the moment. And then when you get a period of stability, then you get the growth on the back of that, which is always really positive. I think if I was to look within that and look at specific things, I would say effective implementation of these new metrics on the growth and competitiveness objective of the regulator. So the regulation we get going forward is balanced and proportionate. I think that's what we all want to see. It certainly aligns with what the government want to see, whether that's Conservative or Labour, as I say. The better e-trade that we mentioned,
Yeah.
that will go down really well, and more capacity. Capacity is tight in certain markets, whether it's a thatched property, a historic building, Range Rovers, Land Rovers. There's real blockers there, and we want to unblock that. That's what we want to do as insurance brokers: is bring those insurance solutions to the client, cover their gaps in protection, transfer that risk, and do a fantastic job. So hopefully, this time next year, if we do it again, we'll make progress in all of those areas.
Graeme Trudgill, CEO of BIBA, thanks very much for your time. All the best.
Good luck, Mike.
Many thanks for listening. We welcome all feedback, so please get in touch with your suggestions on topics and future guests. Please don't forget to subscribe on your chosen platform so that you don't miss out.